Welcome, everyone. We are pleased that you have joined us for today's webinar titled 2025 Key Financial Numbers. The webinar will last approximately 15 minutes, and at the end, you will be given an opportunity to receive supporting materials by email. You will also be told how you may email questions related to today's content to the presenter. Today's presenter is Jennifer Lawler. Jennifer joined the Advanced Underwriting team in October 2014. Before joining the team, she spent 6 years working for a tax and estate planning group. While there, she worked extensively on tax return prep, estate planning, and assisting clients with their tax needs. Jennifer will draw on her legal, tax, and life insurance background and practical experience for today's webinar. And here she is.
Thanks, Amber. And Happy New Year to everyone listening in, and thanks for joining us for today's webinar. We're going to discuss some key planning numbers for 2025. This will be a short review because I know no one wants to listen to me reciting a bunch of numbers ad nauseum. So we're just going to hit some of the highlights today. We'll tell you a little bit later what you can do to get more detail about them, about the numbers that we're going to discuss. And several other numbers as well. But before we get to today's material, I wanted to remind everyone to join us in February for Understanding Net Unrealized Appreciation, or NUA. That'll be on February 5th at 11 o'clock Standard Time. So mark your calendars. That will be a really that'll be a really good webinar to join us for. And now it's time to pick a topic for March's webinar. Your options for the March content are reviewing Form 1099 LTC, managing life insurance during a divorce, or big changes to Social Security. I'll go ahead and launch the poll and give everybody a minute or two to vote. So far, it's looking like big changes to Social Security. So if anybody is interested in a different topic, right now would be the time to vote and show that interest. I'll give everybody about 5 more seconds to vote if anybody hasn't voted that wants to. All right, it looks like in March we will be discussing big changes to Social Security. Thanks for participating in that. We always love to see what everybody's interested in. As you know, each year the IRS typically adjusts several key retirement and tax planning numbers that are important for financial professionals to know. These adjustments are based on the annual cost of living index as adjusted for inflation each year. As we all know, inflation was a big issue for many Americans in 2024, and it does remain so. But because of that, the IRS adjusted almost all of the numbers that we typically see for 2025. The IRS releases pages and pages of notices on these adjustments, but today we'll just be hitting some of the highlights. and more commonly asked about numbers. We'll discuss some key retirement planning numbers as well as some key individual tax planning numbers. And then we'll also discuss a few miscellaneous numbers that are just good numbers to know that your clients may be interested in. If you would like more detail about these numbers, as well as several others, we'll tell you at the end of today's webinar how to contact us so that we can send you more detailed information via our newsletter, Think About It. Think About It is a paid subscription based newsletter. We typically do charge for it, but we believe that this issue that talks about these key numbers is very, very important and very useful. It's a very handy reference for you through the year. Because we think it's so important and so handy, we do share this issue with anyone who is interested for free. So again, at the end of the webinar, Amber will tell you how to contact us, and we would be happy to send this issue to you. We're going to start with some key retirement planning numbers. We'll also discuss a new catch-up that will be available in 2025 for many employee retirement plans. The 415 limit, which is the maximum contribution that can be made to a defined contribution in 2025, is $70,000. This is the maximum that can be contributed to a plan between employee deferrals and employer contributions. It's up $1,000 from 2024. And as you can see, I'm going to put the 2024 numbers up alongside the 2025 so that you can see the difference between the two. In some cases, we do have larger adjustments, and then in some cases, they're kind of smaller increments. But this way, you can see them both. The maximum elective deferral amount, or the amount that an employee can choose to defer from their paycheck into a 401k, 403b, or 457b, is slightly up to $23,500. Those that are age 50 or older can defer an extra $7,500 for a total deferral of $31,000 in 2025. As I just touched on, there is a new catch-up that may be available for some plan participants. Secure Act 2.0 included a provision that says that those ages 60, 61, 62, and 63 can increase their age-based catch-up to $11,250 in 2025. It's important to note that the plan would have to adopt this new catch-up, as it's an optional catch-up and not a mandatory catch-up. Because it's optional, it may not be available under all plans, but where it is, those who are age 60, 61, 62, and 63 can defer a total of $34,750 in 2025. So it's a good opportunity for extra savings where it's available. We have gotten a few questions about how the age will work with this catch-up, but it is the age that you attain in that year. So it is available in the years that you attain age 60, 61, 62, 63. But it's a good opportunity where it's available for people who want to make up some extra savings. The maximum elective deferral for simple plans in 2025 is $16,500, and the age-based catch-up remains the same at $3,500 for a total deferral of $20,000 for those who are age 50 and up. IRA contributions that stayed steady. We unfortunately didn't get any extra room here with the IRA contributions. So in 2025, for those, under age 50, a regular contribution is $7,000 max, and then age 50 or older get an additional $1,000 for a total of $8,000 into your IRA in 2025. Next, we'll discuss some individual tax numbers that will be important in 2025. Individual tax rates for 2025 remain the same at 10%, 12%, 22%, 24%, 32%, 35%, and 37%. I don't have these income thresholds up here because it's a lot of information for a slide, and I'm sure nobody wants to hear me recite those. Again, I would encourage you to reach out to us after today's webinar for our newsletter, Think About It, where we'll give all the detail on those numbers. The capital gains rates have also remained the same at 0, 15, and 20, depending on, how much income the taxpayer has. The standard deduction numbers also went up a little bit. In 2025, single filers and those that file married filing separate will have a standard deduction of $15,000. Head of household filers will have a standard deduction of $22,500, and married filing jointly filers will have a standard deduction of $30,000. The federal estate tax exemption is up to $13.99 million per person. A married couple will have a combined exemption of $27.98 million in 2025. The annual gift tax exclusion also went up a little bit to $19,000, meaning that in 2025, those who are so inclined can gift up to $19,000 without the need to file a gift tax return. The 3.8 Medicare surtax is something that's still in play and may affect those higher earners. So just keep that in mind, that is still something that those with really high income and high investment income will have to deal with in 2025. Qualified charitable distributions are a very important tool that are, they are made permanent now, so they are available in 2025 for those who are 70 and a half or older. The QCD amount has been adjusted for inflation up to $108,000. Those who are 70 and a half can make a qualified charitable distribution of up to $108,000 directly from their IRA to their favorite charity or charities without it being included in their income in 2025. We believe that QCDs are a very powerful planning tool when they are available. So we like to remind our listeners about them. We probably talk about them a lot. But again, we think that they're very, very good planning tool where available. The last numbers that we're going to discuss are just a few miscellaneous numbers that we see come up fairly often. They're, we may not see them as often, but they're good to know about, and they're numbers that your clients may be curious about, may ask about. The standard mileage rate for business use of a car is up to 70 cents per mile, while the rates for medical or moving stayed the same at 21 cents per mile. The rate for a charitable use of your vehicle also stayed the same at 14 cents per mile in 2025. A qualified long-term care insurance policy can pay a tax-free per diem benefit of up to $420 a day or actual expenses if greater in 2025. The corporate income tax rate stayed the same at a flat rate of 21% for 2025, and the 20% business tax deduction for certain pass-through entities is still available for those who it applies to. And again, those income thresholds for that pass-through deduction have changed. And again, we've got that detail on those numbers and how that works in the latest issue of Think About It. Medicare premiums generally increased across the board, but we'll be highlighting Part B premiums here. The standard monthly premium went up by $10.30 to $185 in 2025. For those with modified adjusted gross incomes that surpass $106,000 for single participants and $212,000 for married participants, those premiums increase on a scale according to how much your modified adjusted gross income exceeds those thresholds. The Part B premiums for those with higher income are $259, $370, $480.90, $591.90, or $628.90. And where you fall on that depends on how much your modified adjusted gross income exceeds those thresholds that I mentioned earlier. And again, this detail is in our newsletter, so if you're interested in it, contact us. We'll get that to you. These numbers will almost always have a direct effect on our clients and their planning for the upcoming year. It's important that we help guide our clients and their planning each year, but this year in particular, we'll probably see a lot of anxiety from clients about what's going to happen with the new administration coming in. While our crystal ball doesn't work that way and we can't predict exactly what's going to happen, we can do the best with the information that we do have to help our clients in the best way that we can. Our business owner clients should be using this information to the best of their ability by taking advantage of the low C Corp rates as well as that pass-through deduction where it's available. Keep in mind that if and when those changes come with the new administration, that we here at Advanced Underwriting Consultants will have it covered, and we will be a resource to help navigate those changes. I hope that everyone has a prosperous and healthy new year, and with that, I will turn it back over to Amber.
Thank you for joining us today. Join us for our next webinar on the first Wednesday of next month, February 5th. As a reminder, if you would like to receive supporting materials, feel welcome to email us at asktheexpert@advancedunderwriting.com. You may also email questions related to today's webinar. Check out our YouTube channel to view past webinars. And finally, for more information about the services that Advanced Underwriting Consultants offer, including phone consultation and newsletter licensing, feel welcome to contact us at 615-224-1291. That's 615-224-1291. Thanks again, and best wishes for continued success.